Happy Sunday, everybody. Thank you for being here on this fine weekend. Happy holiday to all those celebrating. As we wait for this thing to get going, you know the drill. And if you don't, let us know your name and where you're watching from. Yeah, Juan already knows. Venezuela, Juan from Venezuela. We've got the Colorado. Canadian representation with Daniel. Thank you very much. Kentucky, Florida, Massachusetts. Let's go. Let them fly. Singapore, Toronto, Sweden, New York, Virginia, Italy. You said Singapore twice. Florida, Atlanta, Florida again. Nashville, Tennessee, Planet Mars, Denmark, California, Raleigh somewhere, Calgary, Germany, Willkommen, Ottawa, Canada, great state of California, Lagos, Nigeria, of course, Fort Benning, Georgia, Bulgaria, and Barranquilla. I don't know how to say that, actually. How long is the webinar scheduled for, please? We usually we shoot for 40 minutes, but Nick just doesn't stop. So we try to get all of the lessons out of the man before he gets tired and has to take a man nap. So we get those lessons out, and then after that, if you guys have some tickers for him to look at, he will do that. And I'll make sure he sees them. Liz, Anna. We got Texas here. We have 2 people from Mars. We got the Dominican Republic. Saudi Arabia. Or Saudi. Maryland. Will this be available for future reference? If you registered for this webinar, as in you put your email onto a website and you're watching on Zoom right now, or otherwise, if you entered your email to register for this webinar, you will get a recording. If you didn't, you will not. So if you're on Zoom, you know for sure you're going to get a recording. And we finally got a UK. Welcome. Dominican Republic. Can the recording be shared? That is up to you. We're going to use the honor system on this. We like to keep this just to folks that were kind enough to register for the event, getting access to their recording. We have someone from China, but currently domiciled in the USA. Is this webinar for complete beginners like me who have never traded options? Yes. It's also for people that trade options all the time. Life is better with options. U.S. via China. All right, so we have an American currently domiciled in China. Trading, mostly losing. You're in the right spot then. You're going to learn how to handle risk. You might even learn a new definition of risk that you didn't already know. Yeah. Guys, help me out so I don't sound like a broken record. I'm sure you guys will get tired of my voice eventually. Help me out. If you see people asking the question, will this be recorded? Will I get a recording over and over and over? Or if you see it at all, please be a kind citizen and comment in chat and just say yes. If you registered for the thing, you'll get the recording. New York, Connecticut, Saudi Arabia, Philadelphia. Why every time when I buy a stock does it come back? Does it get dumped?
It's the Murphy's Law. So let me help you out here. I'm seeing questions, and they circle around learning. And this is my focus today. You don't know this yet, but I'm saying it now. So it's my focus. Learning. It's a learning experience. So I will answer a lot of the basic questions. So if you're a beginner into options, you will see it. You will get benefit from this conversation here. But more importantly, we will provide the option to go to the option, see, pun intended, to go forward and learn as we go.
Perfect introduction. Nick, how are you doing today?
I'm doing great. I was speaking to Harvey earlier, another Benzinga member, and he's getting married, and that was pretty exciting. So I told him, it's a good thing. So.
I told him the opposite, so I'm glad that he's getting.
Oh no! Even though,
opinion.
listen, I was in the doghouse 3 days ago, to reasons unknown to me. Yeah, but I did tell him it's a better thing to be for me. I found a good person, so.
Well, good. You know what? I'm happy for both of you guys. So enough about marriage.
Yeah.
Let us talk about risk reward scenarios.
Yeah.
I would love, Nick, if you could just give us an introduction to you and let us know what folks are going to learn from you today, and go ahead and get this show rolling, and share your screen if you can. That way we get this
right there coming
stuff out of here.
From the let's
and
see
then
here.
I will get out of the way. Yeah, it's up. I see it.
Okay. So happy wife, happy life. Yes. 6-to-1 leverage. Well, you can get leverage all you want, but you better have a good thesis for it. All right. So I've been watching people scroll through. There were a few Arabic-speaking people, some Spanish-speaking people, some Chinese-speaking people, and I can't say hello to all those languages. But so we're going to keep it plain, simple English. Yes, I saw this Ontario one. I don't know how to pronounce it though. Mississauga. Is audio on? Yes. If you can't hear me, well, you can't say anything. So I need an audio check from people out there, at least one or two, not a million. Okay, thank you. So that one person, somebody needs to help, please. So it is about education, and it's about how you can get to doing this in the long run. I appreciate the answers there. Okay, so I saw some people that said mostly losing on options. The only way, so let's back up and start with the easiest statement. Options are dangerous. That's what I read everywhere. They're more dangerous than stocks. It's false. It's not more dangerous than stocks. They can be more dangerous than stocks, but it depends on how you define danger. So to buy an expensive stock, you would need a bucket of cash. You would need a small handful of cash to do so using options, because they are leverage results. However, this makes them a double-edged knife. So if you don't use a method, then you're just hoping for the best, and that makes them dangerous. But you're risking less money. So if your pitfall is smaller, but your odds of losing are faster. So if you do it properly, you can find a balance to where they're actually a lot safer, and we'll get to that in a little bit. Notice I don't have an overhead. I don't have cards to flip through. So it's I'm going to tell you in plain, simple English, but I have a few basic things I need to establish first of all. Number one, we're looking at the SPY daily chart. For the life of me, why were the media concentrating on what was going bad here and ignoring this ascending trend line? The bulls are completely in charge. We have trillions of money pouring into the U.S. economy to keep us afloat. You would have to need the equivalent of an earthquake to break this momentum, but I mean physical earthquake. I live in California. I don't want that. But you would need a new shoe to drop to break this momentum. So by definition, dips are buying opportunities, not reason to watch CNBC and freak the heck out, because they're in the business of creating shock and monetizing it. They're not evil. That's the business model. So nobody wants to read a boring article or watch a boring show. They'll say, you won't believe what will happen after the commercial, that type of thing. So turn off the CNBC, formulate your own opinion. This is TradingView we're looking at here. It's a decent platform. I don't get paid by them, but I suggest you go check them out. They do have a free version and a paid version, so you can pick whichever one you want. So definition of risk, okay? Let's start there, and then we'll go into options, the very basics, and then we'll turn into what what I'm here to show you and what you can do to join us. Okay, so let's go with that. I'm going to start with a scratch pad. So risk. If I ask here, can you define risk to me? I probably will not get my answer. But I will get a lot of how much money I can lose. Most of you will say that. But very few of you, if any, and nothing against you, I've done it in rooms with thousands of people, and I get the bits and pieces, but nobody puts the whole thing together in the way I want to. So let me tell you what I think risk is. Number one, you've got the reward, the carrot, everybody has that. So the elements of risk, first of all, you have, okay, so everybody gets it right. How much can I lose, right? So the amount of money I can lose if something goes wrong. So the idea there is you debate it, you talk it with your significant other, and then you say, you know what? Yep, we're okay with this risk. Let's put it on. This is where number two comes over. And what are the odds? Sorry about my scratch pad, new mouse. So the odds of working out. So one is check. I did this decision. I put it aside. That's not the part I manage anymore. This was a decision I made and I moved on. That is the part I manage. And that is dynamic. It changes by the minute, by the day. So every day I revisit my thesis of any trade I have. Are my odds still favorable? If not, I should get out. Is the reason I took the trade still there? If not, I should get out. Do I see technical reasons that I reached a target where it's going to start going against me? If so, I should get out. So all these, this is the part I'm managing, the odds. Whoops, the odds of success. So manage this part, not that part, okay? That's really important. That's a definition of risk. One, how much can I lose if something happens? And two, what are my odds of me losing? And that goes in life, in everything, in sports, in gambling, in poker. If you want to jump over a fence, say, am I going to break an arm, twist an ankle, or die? That tells you whether you take the jump or not, right? And then you calculate, okay, I can make it. I mean, there's a good chance I can make it, or there's a great chance I can make it. So this is the risk thing. All right, so options. I saw somebody that says, what are options? So that's the very basic question that everybody has. So let's jump in. Those are options. The end. No, I'm just kidding. So those are the options. I'm going to go to Apple because everybody knows Apple. They pretty much know it off the top of their head if I say this or that. I'm going to go to, first of all, option. I'll get to that in a little bit, Max, okay, a little bit later. So the options are contracts. So when somebody says, what are options? You can read definitions everywhere. Everybody's got them. I promise you, I won't use any of the lingo they use because it's so confusing. It's like by design, they want us to fail. This is E-Trade practice platform. Is it perfect? No, it's got a lot of bugs. Is it good for options? Yes, it's easy to structure options in it. It has horrible charts. So the idea is that they're contracts, which means they have a time limit. Look, this one has 47 days. They are all bunch of them. Some expire months out, some years out. You've heard the term leap? Leap? Yes. So leap calls are just leap puts are just way out in time. That's the only difference. Some are weeklies. Like there's one that expires this week. This one has only 5 days on it because it's Monday, Tuesday through Friday. And then this one has an extra week, 12 days. I'm choosing one in May. Current price is 123. So Apple is almost here, right there. So you can see the color changes, right? That's its visual representation. All right, so this side, they're called put options right there. And this side, they're called call options. So far we know they're contracts. They have a time limit. And now they come in 2 flavors, okay? And several levels. So basically, I can get into a contract with somebody somewhere out there at either on the put side or on the call side, and we'll define those two in a second. We can choose to argue over levels and come to an agreement and open the trade where there will be a buyer and a seller. So if I am buying a call, there's another person on the other end selling it. So it's not off the shelf. Like you hear on CNBC, they are buying the 130 call in May. No, they're not. That's half the story. They're buying it, but there's just as many sellers on the other side who think that they're an idiot for buying it, and vice versa. So it's a debate. It's a contract. It's a bet between buyers and seller, anywhere you take it. So keep that in mind. When they are not buying, they're transacting. There's a buyer and a seller. So contracts, time limits, buyer and a seller so far, right? So let's define what they are. What the heck's a put? I'll start with a put because it's easy to explain. Let's say I own 100 shares of Apple and I'm worried for the next 45 days. I'm going on vacation. I don't want to worry about looking at it. Or my son's borrowing the car. They're going to drive it super hard. I better increase my insurance type of a deal. So I would buy protection for a period of time. In this case, for 47 days. If I want to be out of Apple at 110 and I own 100 shares, I will buy the 110 put. This, I would spend $130 because it's $1, 1.3, but it's 100 shares, so times 100. So if the order would look like this, $130 out of my pocket today. This guarantees me the right to sell my stock at 110 at any point in time. Any point in time. Even when Apple is higher. Why I would do that? I would be crazy, but I shouldn't. But the misconception is that price has to be below. No, it doesn't. It has to be below for it to make sense, but it does not. The buyer of the option is in complete control. The seller of the option, their order would look like this. Same order. Their order would look like $130 in credit they receive. That's the seller. That's the other side. I'm the buyer of the insurance I'm paying. And the seller on the other side, there is another side, is selling. Why would they want to sell that? Okay. If they like Apple now, but they want a cushion, they say, you know what? I like Apple now for 123, but you know what? I would love it at 110. Would anybody sell me their 110, their shares at 110? Me looking for insurance? Yeah. I'm the guy. So I'm that buyer. They're the seller. Therein lies the competition. His worst case scenario is he buys shares at 110. His break even is $1.30 lower because he collected $1.30 for said shares. Therefore, his break even is 108.70. So not a bad deal, right? Somebody long the stock now, they're already be down 15, 20 bucks. So in this case, I bought insurance. He's happy getting into the opportunity to get into the shares. That is the one order. So that's a put. It's a way to protect. It's also a way to short. Let's say I don't own Apple and I think Apple's going to fall in the next 45 days for whatever reason. I'll buy the put. I'll buy this one. I'll buy that one. I'll buy this one. Each one has a different odds of success. The closer to current price, the higher the odds, right? But the more expensive it is. So if I have high conviction it's going to drop $10, I should probably buy this one. This way, if it does drop $10, this 230, how do I make money? This 230 turns into 5, 6, 9, depends on how far it falls. It increases in size, in value, for as long as Apple is falling quickly within the 47 days. And then I can just sell it. Once I own it for 230, that's my maximum loss. If Apple falls hard, this 230 turns into 5 or 6, then I can sell it back at 6. And the difference would be my profit out of thin air. How much? So if it is 6 and I paid 2, I made $400 for every contract. That is how you use options to, quote, trade or protect. The first scenario, protect. The other scenario is trade, bet. So that would be on the put side, all right? So what about the calls? The call side is if I'm a buyer of calls, if I wanted to buy Apple right now, it's going to cost me 100 shares. It's 100 shares times $123. That's a lot of money. How can I do it cheaper? I can reserve my price. So I can say, you know what? I expect Apple to rally, but I don't want to spend a whole bunch of money buying the shares. I would like to reserve my price, please. And I will pay $400, $4,400, the price of one of these, to lock my price at 125. So if I'm right and Apple rallies to 135, I'm long at 125 already. I reserved that right. So I can call up the broker and say, hey, I bought that call. I paid $400 for it. Please give me the shares at 125. That position goes away. It gets replaced with shares. My account will be debited the cost of the shares at 125. I'm immediately profitable. That's the reason to buy a call. Okay. So this is now, we've defined options as contracts. They have a time limit. They have a buyer and a seller, and they come in two versions, the puts and the calls. The put side, easiest explained by protection. The call side is to lock my price so I'm in like Flynn without having a lot of money out of pocket. Okay, so why are they risky? Well, because this moves really fast. If I just buy one call, by the way, buying one call or buying one put is called buying a naked call or a naked put. So it's one leg. How is it not one leg? Is if I do a spread, I buy one and I sell one. Why would I want to do that? I lower the cost of entry. Let's see here. Instead of spending $4.40, now I'd be spending like under $3 to have a bullish position. I still need a rally to win. I win at a slower pace, but I also lose at a slower pace because I'm hedged. I have one long, one short. One is designed to make money for me. One is designed to hedge my risk and lose money for me if it rallies. But overall, I'll be a winner. I need price to rally. So that is a spread versus naked. Okay, spread or naked. So, boy, it sounds dirty when I say it that way. Geez, Nick. And on the put side, it works the same way. I guess I can't move it to the other side. There we go. I can buy a put, or I can make it into a spread at any level I want. I can make it $10 wide, $5 wide to suit my personal theory. Okay, so now we've defined them. So now let's cogitate on that. If you're new to options, think about it, write it down and review it. And this is the part of the video as to, I'm trying to tie it down. So there are literally hundreds, if not thousands of ways of using them to invest, bet, speculate. All these are fine reasons to do it, okay? But the method is always the same. So I've been doing business with Benzinga since 2012. So we're doing something right if we're doing it this long, and then we still get attendance as much as we have here today from you on Sunday of Easter. So I know not everybody celebrates Easter, but it's still a holiday and nobody wants to be here on holiday. So the point is, you need to develop a method. And if you don't have one, you need to get help to get you there. But it's repetitive. And the only way to really understand it is to go to school to it, for it all the time. Now, we do have channels on Benzinga from me, and they have different levels. I don't know what they're offering today, but usually it's a starter package and then hopefully end up at a more advanced package. But the goal is always the same: expand the knowledge. So if I don't know a lot of options, I start small. And then if I get comfortable with it, I can switch up and move up to expand my experience a lot faster. So what do I share? I share what I do for myself. First and foremost is I look at the opportunity. So you're going to see write-ups. If I do this for my brother, if he was actively trading, but instead he just calls me. So the idea is to find an opportunity and see how I can monetize that opportunity using the least amount of risk and get the most out of it. And in my case, I look for the highest odds. Okay. I look for the highest odds just because I don't want to work hard. And if I grew up in the war in Beirut, so for me, I always use war terminology. So it's like being in the trenches and fighting every penny up or down, or going to headquarters and fighting the war with binoculars. Guess what? I've been in both situations, and the headquarters situation is way better. So the idea is to find the opportunity and then pursue it. So any opportunity, give me a ticker. Habibi, give me a ticker. What? No, give me a ticker I recognize. STWD. Neo, stop. I'm good. Neo or Tesla, but let's go with Neo. It's a smaller ticker, so it's attainable to everybody. We're going with Neo. Stop. Okay, ARC F, good one. Palantir, either Neo or Palantir. We'll do both. So step one, regardless of what it is. Look at that. We love stocks, don't we? Okay. So step one, regardless of what it is you have to say, what does the world look like? So the first thing is, let's look at the macro. So every write-up will start with a macro opportunity. And every write-up will have a video like this for like 15 minutes. And watch all of it. I don't blab. I'm just giving points and action items. So it's what's the world look like? Well, look at the facts. The facts are super bullish in spite of the negative rhetoric. They look at, oh, runaway yields. So what? What was the other thing they were scaring us about? Gosh, I can't remember now. Anyway, dollar up, something else. I can't remember what it was. Anyway, but they're forgetting the fact that we have the strong. Don't fight the Fed, they say. The strongest Fed on the planet, the craziest Fed. It's going to cost us long term, but for now, it's conducive to higher equities. The second is the biggest stimulus ever. So the Fed not only has lower rates, they don't talk about the Fed giving us $1.44 trillion a year. That's how much they are dumping into the economy. 1.44 trillion. And the government is sending another 2 trillion out. Ask friends and family in the US. They've gotten bigger checks than they imagined. And they didn't do means testing. They sent it out to everybody, whether they need it or not, that qualifies. So that money is going to be blown. I guarantee you they're buying toys. So it's going to land in the companies, in the corporations that tailor to the US. So people, and the Fed, the taper. Oh my gosh. The Fed 3 weeks ago told us the best story ever, 2023 new rates. I just got my mortgage reset to 2.5%. I didn't ask for it. It just came in the mail because I'm in a variable rate. It's just crazy. So everything is conducive to equity growth. So we need a shoe to drop, a new shoe to drop. So the assumption is bullish. Within that, I look for the opportunities. All right, you guys mentioned NEO. All right, so here's what I look at NEO. On the way down, it bounced on 3.5 and 3.8. That was where the whole NASDAQ got thrown out into the trash, okay? So then the bounce was really hard, and then it fell again. So on the fall, if I'm long NEO, I don't get out here. This is a technical blurb. I would get long here because it just bounced from here in a violent manner. So it tells me that they don't want to be lower than here. I get long, but with a tight stop. So my video on NEO would probably have, it's an opportunity to get into long right now. It's too late to get out if I'm long from here. I would sit out and see sit through it and see what they do with this. And my gut is they will hold it. So I was long NEO via a bull put spread, credit put spread, same thing. And I did not get out. I closed closed part of it for greens on the bounce because, hey, they tested it. I dodged the bullet. I was right. I'm not going to dodge the bullet again. So because I also think that there are sellers lurking up here. So the trigger would be, I'll put an alert here, look at it, maybe breaking out. Okay, I expect sellers in here, but if the buyers go above it, it's going to 56 with some resistance at 52. So this is technical jargon that I put into trades and share. The trade setups are more than just trade alerts. I don't consider them trade alerts. I consider them, I consider them teaching method. So the first package that Benzinga will offer will have an opportunity to get these every couple of weeks. As somebody graduates in comfort and they say, okay, I'm ready for the next level, the highest tier, they get 3 a week. So you'll get 3 full-blown videos, 20 minutes each, 15 minutes each, whatever, of opportunities like this. And I speak all of this in the video for somebody that wants to watch it. And then an extra recap on the weekend. Why is the recap important? Because I share this in the recap. And it's my forecast ahead of time. All these boxes I drew before the week started, and most of them hold up. The range stays for all indices. This is my future forecast. Last week, as violent as it was, and the week before that, as violent as it was, nothing breached except last minute, the NASDAQ magic hands popped above. But I was ready for it with a circle already, a week ahead of time. So I'm not Nostradamus. I read the options and I translate them into ranges. So all of this is available, and that's the benefit, is trading with friends versus taking it out all on yourself. So somebody's asking, what's this red blue? This is mathematical regression representation. So it's something out of this platform. This is TradingView. I don't know if the free version includes this. I think so. It's just an easy regression analysis, and it just draws it. So if you've heard reverting to the mean, That's reverting to the mean. Overshooting low, reverting to the mean is up here. Overshooting high, reverting to the mean. So it visually gives you, hey, what channel are they running through? Look at the SPY. Look how orderly this is. Who shorts this action? What are they shorting, right? It's similar to pitchforks, but it's not. So where do I stop myself out? That's an important piece, which I share in my videos. And the stop out level depends on the person. There's no way that one person can say, you should stop out here. If they say that, then they should tell you why, and they better know your portfolio inside and out. However, there are situations like here in NEO. If they lose this, I want to be out, because why are they losing this? I don't want to find out, because technically that may trigger a drop to here. Improbable scenario, I will probably say the situation is here available, but it is an improbable situation. So what I would do is I will put an alert to myself, and I'll say, buy it, basically, tight stop, meaning if it goes below that line, out immediately, because my thesis is wrong. It's no longer a floor. That's one way of stopping out. Another person would say, I don't want to see more than 20% hurt, I'm out. That's different from person to person. Another method is dollars. If I'm down $500, I'm out. That's also different to person. So 3 ways. 1, level. Broke the level, I'm out. 2, X%, I'm out. 3, X dollars, I'm out. 4, if it goes into this area, I'm out. It hit my target. It's going to see resistance. I don't want to ride it down. I'll buy it above that. I'm out, and I'll buy it above that. What school did I go to? Beirut, in Collège des Frères. So the idea is to develop a thesis within the macroeconomic conditions that works. NEO is doing good. It's the second biggest EV, I think. So no, not Colombia. So the idea is to try to be realistic and set a plan and repeat the plan over and over for different tickers. Somebody mentioned Palantir, one of my favorite stocks to trade. Look, they're similar. They have good fundamentals. It's an old company, new Wall Street availability. I think they were a SPAC of sort, like a backwards IPO, but they do have a business. It's about $1 billion run rate a year. So they're not an EV company looking for an opportunity. They actually have businesses, okay? So in this case, I'm long. I stayed long in my risk because I'm confident of the $20 price. But I do note that below that, it becomes a short to here somewhere. And if I'm in it for a trade, I would be out. If I'm in it to own the shares, I wouldn't be out. I wouldn't care. So a break above 28 would bring buyers, although it's resistance through 28. So this is the kind of homework I share with a whole bunch of lines on the charts. And I share via video. The video will be comprehensive as to the opportunity. But here's the hey, guys and gals, we will hit each individual stocks at the end if we have time. But for now, concentrate on the message of trying to see if this is something that would help you improve your trading style and methods. So speaking of methods, every write-up will be detailed in 4 different ways of investing. And I usually share what my favorite is, and I'm very consistent with my favorites. The number one thing people can do, other than the options, is to buy shares and hope for the best. Your odds are 50-50. Yes, this is daily, because the stock can go up, the stock can go down. You can do homework and improve your odds in your head. But the actual mathematical occurrences, it's up or down, right? So the second way of doing it, which is the first way of options, is to buy calls naked. Remember, naked calls, buying a single call? That's my least favorite, unless I have a specific reason for it, and it's rare. I need a breakout and I'm in and out, right? Because it benefits the fastest. It would win the most, win the fastest, but guess what? It would lose the most, lose the fastest. I mean, you could be down 40% on your investment in hours, and that's not my jam. How can I reduce that? By doing a call spread. So enough with that. Let's go and show you pictures of that. So I'll go with Apple. So if I buy a call in Apple, I need a rally to win. That's the most aggressive way of being long Apple. It costs $266 if I want to buy the 130 call. It's $400 if I want to buy the 125 call. They get cheaper as they go up because they're lottery tickets and they're not going to hit. So they're cheap. These, if it goes up, you're already in the money. These, you need to guess up and you need to guess up big. So they get cheaper, right? Makes sense. So if I buy this, I'm out $400. That's a lot of money. If stock goes down 2-3% the next day, I'm down 30% in a blink. If the stock rallies X percent, I'm up 30%. Not my jam. Okay, so yes, all of this is shared. The whole graph, the heat map, Fauzi, whatever it is, they share it in the write-up. I have a writing staff that helps me out with that. They make me look like a champion by doing that. So the second less aggressive way of being long is to do a call spread. So instead of spending $400, I spend $400 and then collect some money to reduce my out-of-pocket outlay. In this case, I'm spending under $300, so $290, and I have the opportunity to turn that into $1,000. So not too shabby. I'm limiting my upside potential, but tripling my money is always okay in my book. So if Apple rallies like I think it does through both, I'm going to turn $288 into $1,000. I don't have to own shares to do that because I'm taking a risk by spending money to say, hey, I want to buy Apple at 125. I'm shorting that risk higher. So I'm paying a value that if the price is above here should be $10, but it's not. We'll talk about what is needed in the account in a little bit. The risk I take is finite in this situation because I can only lose $288. So to answer your question, if I have a $10,000 account, when I open this trade, I'm only risking $288 because if Apple falls, then I lose this amount and that's it. And I can close it at any point in time. This trade has 47 days on it, but I can close it at any point in time. So there is no margin in options the way you think. If you're trading stock and you're trading stock on quote margin, means you're actually borrowing money to buy that you don't have, and then you have to pay interest on that money. Well, when we use margin in terms for options, none of that. The margin is the amount they reserve to take away from the cash available in your account. So if you have a 10,000 account and you open a trade that risks a maximum of 800, then they just reserve 800. And they said, you have cash, but you can't touch it. That goes against the risk. When you close that risk, you can have that cash. So there's no borrowing, there's no interest. They're just like a credit card. When you swipe the credit card, they reserve that amount, but you don't get taken the money out until they submit this stub on the other end, the merchant. So this is the call spread. Second method. The third method, which is my favorite, is the put spread sold. So you can buy a put or you can sell a put, or you can buy and sell a put at the same time. So this is called a credit put spread, or it's also called a bull put spread, meaning it's got the word put in it, but it's bullish. In this case, I want price to stay above 110. Oh, sorry, Mom. I want price to stay above 110, and it is that's all I need. The price can fall into 110, but I won't incur losses unless price goes through. So I collect money up front, and that's the most I can make. But I'm also risking a finite amount of money, and I know it. I go to sleep knowing that if price goes to zero, that's the maximum I can lose mathematically. Therefore, I'm okay with the trade. So these are not actual trade alerts right here, right now. I'm just explaining the concept using these actual spreads in front of me. Yeah, so the idea is well, why are you risking so much to make so little? It's like, am I though? I'm not. Usually, like even 50 cents on a 450 on a $5 wide spread sounds wonky, but the odds of it winning are super high and it yields 12% on the money at risk. Think about it. I'm collecting 12% yield in short amount of days with high percent of theoretical chance of success. 15% chance of loss, usually the worst I want. So starting out on paper, yes, in a second, I always structure my trades, try to when available, to have at least an 85% chance of success. So I finally, they've been asking me, try to do it, finally tabulated the results. Everybody says, well, what are your results like? First of all, if you're looking at me as a trade alert system, you're missing out on the best aspect of it, which is learning how to fish versus taking the fish. So thank you. Somebody knows their odds right there. So the finally tabulated it. So out of the, I don't know, 123, 130 trades I sent out to the upper tier, it, the win rate on credit put spreads is well over 90. So you would have to work hard to mess up the setup. And the average on those was like 15%. But those are the money makers, base hits, high. If you throw an easy pitch at most professional baseball players, they're rarely missed, right? Pop, pop, easy pitches, right? So, and if you go to the debit call side, okay, so the average is a lot higher. The winning is a lot higher, but the winning percentage is like 75% of them had at least 15% win at some point. So if somebody didn't book a 15% win and they rode it all the way up and then all the way down, that's on them. I cannot tell you when to book your profits. So it's hard to gauge, but I can tell you the stats that like 81, 82, 83% of them had greens at some point. 72 to 75% of them had at least 15% greens. So those are real hardcore numbers that I tabulated last week. So, and last week I initiated the trade in AMD, for example, that was an immediate win, and based on the charts and charts alone. So the odds of winning are in the tables themselves. Luckily about options, the good thing is that you can calculate the odds of success based on the information in the options table. So folks, even if you don't want to trade options, which I'm shocked because you're here, but those spread the message, those who are not trading options, they can forecast the action by looking at the options table and not touching it. I just showed you how I can forecast I can forecast the actual action just by reading the table. I get these values from looking at this. And I share it. So the odds, so here's where we're going to mention one Greek word and not use it. So delta, in options, they have Greeks and they spend days studying the Greeks. Oh, it drives me crazy. All right. You can study gamma, vega, theta, delta. No need to delve into all of this unless you want to structure the market, right? So two things matter. Theta, you got to understand that theta, time, is a factor, folks. And if you're buying options, time is against you. If you're selling options, time is likely working for you. So if you're a buyer of calls, time is absolutely an issue. If you're buying a call spread, you kind of eliminate it. Well, you neutralize it a little bit. If you're selling puts, time is working for you. If you're selling put spreads, same thing. So the second more important is the delta. So this is the delta column. These are my actual columns. I don't look at other than this. I don't look at buy a bid and ask. Like everybody says, whoa, the big and I don't care. I trade with liquid tickers. It's going to fill in the mid, the middle between the mark, the middle between bid and ask. This is the mark. And so if I open this, it's going to show me a bid of this and an ask of that. I don't care. It's going to be somewhere in the middle lies the truth if it's a liquid stock. If it's an obscure company that doesn't have a lot of action on it, then it might be an issue as to where it's going to fill. but I don't really need to see bid and ask. So that is the delta is an important column. So let's talk delta. All right. So options, whether you know what they are, you don't know what they are. When you buy a stock, your odds are 50-50. It can go up, it can go down. Same with buying anything, puts or calls at current price. So right now, Apple is 123. So here, right here. So if I buy a call, I have about 50% chance it's going to rally or not because I'm right here, right? Look at the delta, about 50.5, right? So anything around current price is between 0.4 and 0.6. So anything around 0.4 and 0.6, guess what? It's a coin flip, absolute coin flip. That's the mathematical odds of you winning or losing. Same thing on the put side, 0.5, 0.4, 0.45. It's between these two values. Again, a coin flip. And look, the further I go down, the lower the value becomes. Ignore the minus. The lower the value that comes, because that is my odds. So if I'm buying a lottery ticket here, I have a coin flip odds, high odds of success in lottery terms. The lower I go, like if I buy this 100 put to make money, I don't have much good odds. There's very little chance Apple is going to be at 100 in the next 47 days. And if Apple is at 100, that means the market crashed. Okay, so this is how I use delta to give me a gauge of, hey, what's my English? What's my edge on this? So if I'm buying, I want to stay close to 35 to 30, somewhere in here. If I'm selling, I want to be down here selling lottery tickets they're going to lose to somebody. So if somebody wants to buy this one from me, I'll sell it to them. So that's the concept. And this could be for any time. So somebody mentioned leaps. So I can commit long to Apple through 2022, January. So this one has 292 days on the clock, right? So if I'm okay buying Apple at 100, I can sell it and make money today. So 100, I can collect $400 today to promise to buy 100 shares at 100. How cool is that? So if I believe in Apple long term, I'll do that all day long. So that's just one easy way to do it. But selling puts naked is no bueno. Somebody mentioned a little bit earlier, what are the unlimited risk situations? I think somebody mentioned that. That's a really important thing. That's somebody that has managed risk before. They want to know, what's the worst case scenario, buddy? Let me tell you what the worst case. So one thing I never do in options is sell a naked call. So I don't know if you're familiar. You've heard, I'm short the stock. When big money people say they're short the stock, that means they traditionally shorted it. And I don't know if you know how that thing works, but let me tell you, when you buy a stock, yes, thank you for mentioning that. So when you buy a stock, your risk is what? 100%. 100%. You can lose your money. That's it. When you short a stock, your risk is unlimited. And let me explain to you. So you have 100 shares of Apple. I think Apple is going to go down. That's theoretical. I say, you know what, Bob, give me your 100 shares. I will return 100 shares to you. So you borrowed 100 shares. You sell them. You pocket $123 for 100 shares. And then if you're right, Apple falls to 115, 110. And then you say, Bob, I'm going to return your 100 shares. You buy them at cheaper and you return them. You made the difference. Now, if you did this with GameStop before it spiked, you went bankrupt because the stock went through the roof and you're losing money for as long as it's rallying and you have not covered your short. So selling a naked call mimics that situation. So yes, that mimics that situation. So when I remember, it's like, who buys a call? Somebody that wants to assure themselves an entry point into Apple at 125. So they spend $400 and they say, I'm a buyer at $400. Somebody says, okay, I'm a seller at $400 at 125. So the scenario, you wake up and Apple merged with Amazon, ridiculous, right? And Apple is at 150 and rallying. So suddenly that person says, hey, I bought my call at 125. And the person that sold the call is like, oh, schmutz, I'm out 100 shares times $25 and losing. So they have to go out, buy shares to deliver them if they don't have them. So if they have shares and they sold the call, that's called a covered call. That's totally okay from that risk perspective, because all they have is that stop profiting from 125 on up. That's called selling a covered call. That's a valid strategy. However, you need to do your homework. And the first step is, are you willing to sell the shares? If you're not, don't sell the covered calls. Don't sell it because you think it's not going to happen, because it will happen. And you're going to say, oh, shoot, I wish I hadn't sold that call. So the wheel strategy, you're going to have to explain yourself, Tony. I don't know what the wheel strategy is. I may know it, but under a different name. Well, the what is the time frame to cover a short is whenever you run out of money and the broker says you've got a margin call against you. If you're Soros, probably never. You can withstand the pain forever if you're worth billions. Okay, perfect. Somebody's talking about open interest and implied volatility and value. Thank you. Open interest, right there, column on both sides. This basically tells us there are these trades when we woke up this morning, the morning of this event, which are Friday or Thursday, sorry. So Friday was off. And this is what happened on Thursday. So Monday, this number will change based on what happened on Thursday, and this number will tick to 0. This is a static number that nobody reports live. They update overnight. This is a live dynamic number that if you had this platform open during the day, you'll see these numbers change. Beep, 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 beep. So open interest tells you where's the money on both sides. Volume tells you what's going on today. So again, I don't know if I said it or not because I had another presentation earlier, but if you hear on CNBC, they are buying the 125 calls in Apple. That is incorrect. They are not buying that call. They're buying it, and there's a one seller to every buyer. So I don't know the buyer. I don't know the seller. Why do I believe the buyer is smarter than the seller? I should trade my own. In racing terms, they say drive your own race. I speak it from first time I was on the racetrack, open wheel cars. They don't have a lot of grip. I don't know where the limit is. I tried to follow the guy in front of me and he was faster than me. I wrecked. Drive your own race, because I tried to emulate his speed. I got in too hot. I spun out. So you should trade your own portfolio and your own scenarios. If I'm long a whole bunch of tech, I don't need to chase another tech company just because somebody said it on TV. Which one is more important, volume or open interest? It depends. I like open interest because it tells me where the money is. Should I sell AMC? We'll do some charting at the end. So the method is very consistent. Number one, you will see the macro. Number two, the description of the micro of the company in question that I'm sending out right up on. And the reason why I'm chasing, catch the falling knife, a breakout in progress, whatever. And then I would share the charts, the support and resistance lines, and I supply the entry table that has all 4 flavors: buy a call spread, sell a put spreads with caveats and odds and yield percentages and all of that. Everything I need to place my order myself. Also, the video goes through exactly what I've been saying here for about, I would say, 10 to 18 minutes each video. What are number to open interest? Come from real trades. What do you mean real trades? It's all real trades. So everything. So if somebody's looking to learn somebody else's method and the method is successful, especially if you're interested in selling bull put spreads for an income, credit spreads for an income, that is one sure way of getting the high odds, risking more money, but at higher odds of success. So for example, I don't know if I said this yet. So if I do this, check it out. This is a bull put spread, Apple, again. This is a bull put spread that I collect. This should be 250-ish. Let's say it's $2 for round numbers. I'm collecting $2 up front. The value of the spread is $5 maximum, right? I'm selling the 120, that opens risk. I'm buying the 115, that limits my risk. If I sold this naked, I'm long Apple, but aggressive. I'm on the hook from 120 and lower. I buy the 115 to limit my risk. I'm off the hook at 115. So for this, I collect $2 instead of $4. If I sold this naked, I'm collecting $4. But I'm saying, you know what? I don't want to own Apple at 120 without any protection. I'm going to limit my loss. So I'll sell the 4, collect the 4, and I pay back 2. So the net effect, I'm going to go with $2 credit, okay, for round numbers. So instead of collecting 4, I'm collecting 2. The maximum I could lose is 3, because this can go to 5 if Apple goes to 0. But I collected 2, I'm open to losing 3, right? I prefer collecting less and going down here, but here I have 85% chance of success versus coin flip. 85% risks more money because I'm only collecting 50 cents versus 2, but it's a calculated risk and I have good odds of success. Okay, so this is one thing we can do. That is my favorite way, and it's a valid way of creating income over a period of time. Now, again, this particular setup I just showed you is not an actual trade setup, because for me, I don't want to take 50 cents into an earnings report. This most likely has an earnings report in it. Yeah, 428. I don't want that, because the earnings, the short-term reaction to an earnings report is binary. We don't know what the expectations are. So this would include an earnings report. So this would be the shortest one I would bet on, or I would go out to June and leave bigger room for error. So that's my personal preference. Okay, so what do things like, let me go. I do have open trades in here that I've shared and I've practiced with over time. I'm going to show you the differences. Okay, so I'm going to use NEO. Somebody mentioned NEO earlier. At the time I shared a trade with NEO, I was long the 30 put or the 31 put. I have the same position, similar position. So the idea is I sold and collected 41 cents to open this risk. And I'm risking $1.60. But I had a big room for error. So NEO had to drop a lot in order for me to lose. In fact, now it's valued at 0.26, so I already have profits. And it's a sizable chunk in percentage terms. For example, I already got 72 cents out of $72 out of the $205 I collected. This is just a random amount. I chose 5. The other way of going long, oh, by the way, this has 2 legs. I sold the 30 to open risk and bought the 28 to, oh, maybe we can go there. NEO options, May. Okay. Where are you? See, you can't even on the screen. You can't see them on the screen. There they are. So this is my position that you just saw. I'm short this leg. I'm long this leg. And the position is profitable now. I can buy it back to close it. I can close it, but pay 26 cents, and then the risk will be off, and I would have made $72 out of the total $205 I could have made. Not too shabby. So the answer to your question, which I know a lot of you have, I don't wait for it to expire worthless. I always buy it back. Whether at 25 or 10 cents, I always buy it back because stuff happens. The other way of going long is to buying a debit call spread. Here, I'm buying upside hope. And in this case, it is more expensive now. Therefore, profits, I timed it well. So whenever I entered, I paid $247. Now it's $290. I made 40 over a base of 240. Not too shabby. So 2 different methods. So the other 2 methods that I didn't represent is selling the put naked. So if I sold it for 152 and didn't buy this, now I'm up 50 cents. So I'm up $200, $300 on that order. On the call side, if somebody was ballsy enough to buy the call naked for 440, they made now it's 520. So the difference is their profit, $80. So see how it is easier to make money by selling put spreads on bad days than it is to buy upside hope. So this is probably a couple of weeks, maybe 10 days. I can't remember exactly when, I'm sorry. Similar situation with skills and ping and IBB and CRM. So it is up to the individual to choose the method that suits their personality and their time frame. I'm busy all day helping people, so I cannot buy naked calls. I will make mistakes, and the mistakes are costly. My favorite way is to sell a put spread or a long dated put and let time do the work for me. Okay, so Thinkorswim, I think, is better than Tastyworks just because they've been out there longer. I have not used Tastyworks, and I think they're more expensive. Think. I don't know, so verify that fact. I can speak to Thinkorswim being super strong technically. So if you want to be complicated with charts, it's I would be surprised at that. Last time I checked, it was a no-brainer for me to stay with Thinkorswim, but I have not looked at Tasty recently. So E-Trade Pro, the standalone platform. Wow, okay. So yeah, it's whatever works for you. Somebody keeps asking, what is more important, volume or open interest? They're one and the same. It's just one is one day ahead of the other. So it all depends what you're trying to do. Open interest is super important for me. I do daily checks on all the open interest because that's where the money is. And the volume just tells me that's where the money is interested in, but I don't know the end result of it until next day. So I don't chase high volume, if that's what you're asking. In fact, if I see a high volume in some place, I'm probably more inclined to sell it. Because, what did I not say today? What did I not say that you would hear in every options class? Anybody? Don't do drugs. No, I didn't say most options expire worthless. Right? That's what everybody says? Right. So why on earth would you chase a heavy options action? That's by definition the most options. So, and don't ever bet against the market maker. Who is a market maker? It's somebody that sells something. They're usually smarter than the buyers. And the market makers rarely lose. They're not just banks. They're people with money. So if I know risk, I sell a straddle and I make money with time working against all the hopeful people who are buying calls and puts. So as far as you can get complicated as you want, the simple fact is, if you have a solid thesis, you can put it into action with very uncomplicated methods. And if somebody tells you, here's one way, you look at it and you evaluate it and you say, you know what, that makes sense. Well, GE was where? It's still here? Or did they expire? So I had 2 orders for GE, Ford, and Boeing. That GE and Ford, I called them when they were under $7, and they were leap calls that I bought and I shared, and they were huge wins. Same with Disney, huge, massive wins. So somebody that rode those and stayed in them forever made a lot of money. But the idea is to scalp out at whatever level you deem appropriate. I'll tell you what, GE, it's in my head. I just answered somebody's question about GE. So a good friend of mine who might be in the room here, actually, a childhood friend. So let me see here. So here are, I do have, how about this? If GE goes above 1450, it's a buying opportunity for the long term. So I measured times. I put time limits and they're the same pretty much, and extended this rally was the same, and this was not drawn yet. So I said somewhere here, maybe they're going to here, and sure enough, they shot. So now we have another stent of this time. Maybe they want to repeat this one, copy paste, and I'll move it over to here. Maybe they want to repeat this. So what I'm doing with GE, I'm going to go to a weekly chart, take out all the drawings. Okay, so weekly chart, check it out. You want to talk turkey? Let's jump into charts right now. This is what I do all day, every day. So this is GE over time, long term. These are weekly candles. This is the problem. If the bulls, God, new mouse, I can't control it. If the bulls do whatever they want to tackle said problem, and they can get above it and come back and test it for footing, she gone. What's the upside potential? You tell me. It could be this much. And where the likely fight going to be? Somewhere here. Oh my gosh. So if above whatever this level is, what did I say, 1450, I would chase it long again, with knowing there's going to be immediate resistance here. Immediate. They're going to try, which is fine. They falter, they come back and test this footing, and the testing of the footing could come down to here. I don't care. But that's what happened to Boeing. Same thing. Went long Boeing. Beautiful breakout. Beautiful. Twice. Off of 244. Let me show you my drawings. Do you like to see my drawings? Whatever show that was out. So I had two paths, both leading to here. We got it one time. They are coming back. They retested the floor. Look, they retested footing. They're coming back. If they take this out, there'll be a new breakout. My goal is 305 to 309. 12 indicators. Oh, well, they're all muted. Look at that. Somebody sharp as attack over there. So I'll tell you what I use, right? So notice I don't have MACD. I don't have RSI. I don't have Ichimoku. I don't have I only have first tool I use, my eyeballs, and I have an innate ability to find Fibos, Fauzi. So Fibonacci levels are eyeball targets for me, and I'm pretty darn accurate with it. So all these other things are great, but please specialize in them. So don't try to find whatever is working for somebody else. Specialize in the stuff that works for you. You know what the number one tool that you have and you don't use? Most people don't use? Nope. You carry it with you all the time. Yes, there's somebody. Ben, eyes, eyeballs, brain. Eyeballs. Look left. What happened last time they were here? That's all you got to do. Just look left. So right here, they're coming into a cluster of problem areas. So going into here, there's going to be resistance. And when they get out of here, last time they failed, and if they don't fail this time, that means the bears are tired, they overshoot higher. So yeah, between your ears, look left. That's the number. So they say that machines do most of the trading, right? So they use left data. So the data is all on the left side. So let's say, what is this, BA? Let's say Boeing falls into here. Is this a place to get out? No, thank you. This is a place where it just found support. So the assumption is support holds until 231 fails, 232 fails. If 232 fails, they could come down to the second level of support. So if I'm long here, I stop out unless I'm okay. Then I double down here because that is a much better support. I triple down here. There's a gap open to here. I don't know why they would want to go to 160, but if the market crashes, I'll get loaded on BA down here. So the data is on the right though. The data is on the left. So somebody asked, what are these? So what I have showing here is the regression line, which is just a visual representation of the trend. So if I wanted to look at the SPY, I can visually see who's controlling the action. It's nice and orderly. I also have this stuff, the orange and blue. This is the volume profile. The volume profile, if you guys and gals know all these down here, they're volume bars as to when this stuff happened, right? When. This is where, at what level. So if I go to BA again, it tells me that when it fell to 180, that's the busiest place for trading action. Look, by far, that's the most action around this price. So if it's falling into this price, that's solid support, solid. Because they're busy, they're going to get busy again. And when they get busy, it becomes muck. And if it's rallying into a busy area, it's resistance. So so let me see here. NEO, somebody mentioned. Oh, CCIV, somebody mentioned. So let me tell you CCIV, and that answer goes to all of these EV companies. By definition, CCIV, that's what Lucid, right? It's a niche car. It's the starting price of these Lucid cars is the high-end price of Tesla, the way I read it on their website. So by definition, it's not going to be a mass market play. This would not be the company for me. So I wouldn't buy the dip. And in fact, I wouldn't double down on the dip and average down. I alerted Highline users with videos to, once they lost 18, please don't add to your risk. The stock is going to close to zero as possible. And when I said that, I got hate like you wouldn't believe. And I was long at the time. So now it's single digits basically, and they're fighting for survival. Doesn't say anything about the company. It's just the stock is in shambles. So Palantir, I would average down because they have a business. I'm long Palantir. I would stay long through thick and thin. Oh my gosh. Neo is also I'm long. I trimmed. So how do I manage my risk? I was long Tesla via credit put spread at 480. Guess what? I didn't even check it when Tesla was falling. Ridiculous. I did not check it. I was also long ARK K via credit put spread that expired last week. So it was at 118, and ARK K was below 118. And this rally bailed me out of trouble. And I did not need to close it in hindsight. It closed above 120. I would have been a complete winner. However, somewhere here, my trade turned into flat. I think it was a little bit green, but let's call it flat. I closed it. Why? Because I'm long Tesla already, and Tesla is 10 or 11% of ARK K. So I was like, I'm out. So Tilray, it has, so they do have the merger agreement, right? And I think it's supposed to close in the second quarter, but it's a fluid the situation with Afria, where it's a dynamic link as far as the deal, like 1/3 share of whatever complicated thing is, whatever is the deal, it should close in the second quarter of this year. So Tilray closer to 19 is a buy, and going into 28, 29, 30, it's a book your profits and chase it above 32, 31 and change, technically speaking. So other than that, do your homework on what's the company worth. I would not want to find out what lies below $18 per share. Neo is worth more than Ferrari and other Chinese. Okay, so the idea to compare Neo to Ferrari is, I don't know what the point that would be. They're in completely different markets and attacking completely different opportunities. Neo has the second best P&L out of all the EVs. So, I don't know why people would poo-poo that. There's another competitor coming up, which is, XPEV, XPEV. It's like a fraction of Neo. Neo is a fraction of Tesla. Workhorse, I wouldn't touch it. The answer to all EVs is the same. Unless you're Tesla or Neo, you're speculative, hoping for income. That is too much hope for me. I do not double down on speculative stocks. Please, please, please. XBEV owns Neo shares. There you go. The Delta explanation, I thought was how much the premium. Yes, it is. I told you that's the definition. You can go and read it. I can't see the name. AA. I didn't understand the Delta explanation. If you go read the definition, that's what it is. I'm telling you how I practically use it in my favor. If you look at it, the current price is always 50. So that's a coin flip. I don't care what the ticker is. Give me a ticker. XBEV, out of the blue. Okay. The Delta, what is price? 37? The Delta is around 45 cents. Like 54, 35, somewhere in the middle is the Delta. That's a coin flip. You step away from it, the coin flip become shorter and shorter. So that's the odds of success. I'm telling you how to use the Delta practically. SPACs, depends on the company, George. I don't chase SPACs just because they're a SPAC. And I don't chase the company buying into SPACs. Tesla running new batteries that charge via sun. You mean solar power? They bought a solar company, so that makes sense. JD.com. Okay, so there's a new company, new ETF from ARK Invest. ArcX, and it has JD.com in there. So clearly, I don't know what JD does, because how is it in a space exploration? So JD bounced hard. They bounced too low. That tick was too low, and it has sellers going into 88. So this closes the gap right here, 88.50. I think they have sellers into 88.90. So I wouldn't start longs now. If I got long here, I would trail, because they're probably going to come back down. But this should hold. Look, it's the bottom of the volume profile area. So it has a lot of interest. This is a daily chart right there. So what I don't want to see is, do I have lines on JD? I don't remember anybody asking me. Oh, we do. Let's go. All right, so check it out. Perfect, people. Look at it. Trading with a plan. So this was my answer for somebody a while back, because clearly the line was there. Look, what did I say? Support zone, if lost, could test 80, support there. Okay, those were my words before it happened. It lost it. Support at 80, so they bounced off of that. This was support lost. This was the path that never happened. So now everything that was support becomes a problem. So if I extend this right, I would change it to, this is R zone, because now it's into a prior problem area. Same with this one. So here, there's another R zone. Oh my gosh. So if I copy this one, paste it, I'll move it over to here. Definitely. So now you can see where you're going to run into problems. So if it falls to here, it should be support still, the $80 level. The blue and level, these are volume profiles. The fact that they're blue and the fact that they're yellow is not as important. Upticks and downticks, but it's actual volume. SNDL. Oh, gosh, I don't like tickers like that. I mean, you're at the bottom end of a range. You need to do homework on the company and see if you like it, or actively trade it. Like you can see how they're struggling to hold the bottom. A blink below these will bring sellers, and I don't know where. So up to you. J&J, I saw that twice. What? Okay. Do I have lines? I don't. That's weird. All right. So it's reverted to the mean. It has support through 160. It has resistance through 166. I think a breakout, unlikely, above 167 could bring a move to 172. So this is where, on bad days, I would sell put spreads. Rivian, cool. Listen, my wife yesterday said she saw a truck that was Rivian. I was like, Rivian, you mean? She says, yes, in Orange County. So it's on the street. I also know somebody that works for Rivian. So that's pretty cool. Gosh, I forgot what ticker I was going to look at. Twilio. Okay, so get this. This is a Twilio market. What does that mean? I've been using Twilio like the VIX for over a year intraday. It is like clockwork. If the VIX is high and Twilio has bids, don't believe the VIX. The VIX is lying. If there's bid in Twilio, risk appetite is alive. So don't short the markets, side with the bulls. So October 2020 top, then a breakout. That's my notes to me. Tight stop. So clearly they fell through. The trigger happened. They almost came down to the low. I am long Twilio. I had two positions. I closed one of them on the way up on Friday. When it was that tick on Thursday, I was out. I still have another long, but it's way current price. It's a credit put spread. So I sold put spreads on fear days. When is a good time to buy calls for Leap? Whenever you think a stock is worth it. So for example, give me a ticker. What ticker are you talking about? Palantir. I own a Leap. How about that? And I'm selling calls against it every week. Rocket. I would own a Leap. So let's look at the chart. But I have to be honest with myself and reevaluate it. I don't understand why Rocket is so low. And if they lose 2170, 2150, I have to ask myself, are they going to fill this? See this support zone? I should extend it to the right. To 275. Is that long enough? No, 325. That should do it. So if it's lost, they could come down to here. So if I'm okay with this, I don't load up all my leaps at once. Break them up. Break them up. Moderna. I want to stay away from the Moderna. Frisker, not a stock I would chase. He's failed so many times before. So onus is on him to prove it. Peloton, Run, geez, Space. So I know that Run was not for me now. Peloton, Disney. So Peloton, this is a trigger. If they can go above 119, look, it's the resistance, but it's also the opportunity. And if you look at it, it looks like an inverse head and shoulders. What is he talking about? Shoulders and heads and shampoo and dandruff? No. So you got one failure, a second failure, and it looks like they're drawing ... If they can do this, they rally this much to a resistance zone. They will sell. They'll find sellers along the way, so they'll go cheat. But that's the technical term. MAGA. Let's see here. Baba, I'm at a loss as to why it's this low. Square, I'm long. AMC, I don't touch. Let's see. Disc A, I don't touch. I'm missing a piece. But you know what? The sellers sold. DraftKings, I would own it for the long term. Chewy, I would own it for the long term. Teladoc, I would own it for the long term. Disney, Disney. So revelation, if you haven't figured it out yet, Disney is now Netflix. Okay, so the olden days where you buy Disney because it's a good company you pass along to your kids, no, not anymore. It is a Netflix in the olden days trade. What did you sign up this quarter? Buy, sell. That's it. The financials on Disney are in shambles, absolute shambles. And look at the chart I drew. It's coming to life. Like I said, they would fall. They would come back, and here's the opportunity. You go above that one, they go to tackle this one. You go above this one, they're going to trip on that one. And this is, so if I sold put spreads on the way down with Disney, look, support. So if I get long here, I stop myself out immediately unless I want to ride it down. But Disney trades like the old Netflix. Tesla, I think it's going to pop big on Monday. I believe they reported the updates on deliveries, and there was no downside revision. So NIO revised their numbers because of the chip shortage. Tesla did not. That should be extremely beneficial. And look, if they break out of this, I think they can go to 760. So I got into an argument in a chat room this last week. Somebody said, I'll buy it when it gets to 400. I said, so why don't you sell the put at 400? Well, a whole bunch of reasons why not, right? So you don't buy it when it's at 400. If you did, you'd sell that put at 400. And I said, I'll tell you what, I would sell you that put at 400. And with the money, I would buy a debit call spread for December at 700, 800. It's zero cost out of pocket. It's like $2,700 cost, I think it was, $27. But it cost me zero because I collect 27 and I spend 27, and I would have been long at Tesla right here. And that trade would have been gobs of money on Thursday. And if Tesla jumps on Monday, it could be in the middle between 700 and 800 in the next couple of weeks. So Tesla is no longer the old kickball. People haven't figured out something, and I'm not a fan. I was a skeptic. Look at what they did. All right. So cash from operations, where is it? Operating income, $2 billion. $2 billion. That's better than Ford. All right. So their situation revenue went up, profit margins, that orange line went up. Cash flow from operations, that's the blue line. Look at it, up. Cash flow from financing is even better. So they're making good financial decisions. When did they buy the Bitcoin? That's what I want to know. I don't know. And what if they doubled their money on that pile of cash? So their balance sheet is going to be even better. Right. But when? At what level with Bitcoin? Was Bitcoin in the 30,000, 20,000, 15,000? We'll see. Look, debt to assets collapsing, debt to assets collapsing. That's great news. Look at the asset line. What if they have an extra billion or two just from the Bitcoin trade? It's no longer the crap company it used to be. It's still expensive from the standpoint of price to sales. 24. That's 6 times more expensive than Amazon. Fubo, I don't know why it's this low. Nicola, don't touch it unless you want to gamble. So is it fake or is it not? I don't know. You don't know. So you think you know, but you don't. So there it is. Is it fake or is it not? It's a binary event. You buy it and you hold it. LI. Lee, I would buy a break above 27.50 for a trade. I would buy the dip into 22 with a stop. I don't know MVIS. There's nothing for me here from the chart on MVIS. NVIDIA, I am long. I'm long NVIDIA, but I'm also long AMD. So NVIDIA, I sold put spreads on the way down, and now they're very profitable. I think I bought them back for 12 cents. AMD, I bought the breakout and I was profitable and I spread it. Maybe I shouldn't have, but I turned it into a spread. So I now need it to not rally so fast. Whew. Riot, Cat, QS, careful with QS. It's a binary event. Will they succeed with the static battery or not? BlackBerry, I never touch it. I'm not that fast. BlackBerry doesn't leave a window open. If you catch it, great, but then get out real quick. Viacom C, something going on between B and C. When the arbitrage is this big, I am definitely missing a piece of the puzzle. That's the same company. Wait, is it B or A? Anyway, the difference between Viacom, the two Viacoms, CCIV I already covered, I think. Riot, we keep mentioning it. Like, so it's tied to Bitcoin price, right? Riot, that's the only thing they do now. Bitcoin miners. So, I'd rather bet on Bitcoin. Shopify, good company. I can't trade it because the options are not liquid. You go to get a quote, and unless you're buying naked legs and selling naked legs, and they're so expensive, I just can't use it. MVIS, I already said I don't have any input from the chart. It's just in the middle of a range, so I can't help you there. Walmart, it was a buy for sure, and I suggested it to friends and family, and with a risk. So I said, this is the improbable situation. It's available, but it was improbable. Therefore, the opposite must be true. Bentley is a company now out there. Skills, I'm long. I shared along. I don't know if I'm actually still long, but I shared along. Facebook, it probably is going to have a headline soon, because Facebook is, if it makes a headway, if it makes one step up more, it's in open air and it's going to 330 or more. But I have a feeling they're going to fail one more time. I don't know why, but they're going to fail one more time. And if it does fail into 280, it's a buying opportunity. Target does well, buy it on dips. Generac, it's a seasonal thing. Regional financials, I would short all financials on pops. And I did. Goldman Sachs and JP Morgan, and I won a couple of times. Micron, I call bullshit. Whoops. I call bull on the company, but you can't short it because of the chip shortage. This company CEO is feeding me garbage. We've never been better. We've never had a better opportunity. We've never this and never that. So where the fudge is it in the performance? Why is your stock price? I mean, everything is going the wrong way. Profit margins are falling, sales are falling, debt to assets is rising, and now the income statement statistics, it's 10 times more expensive than it was. This used to be 3 PE. Now it's 31. I don't get it, but I don't want to short it. I've shorted it twice successfully. I'm done with it. Blink, MPX, Stock U, junior miners. Gosh, play Fastly. I like Fastly. Buy it on dips. Get long on dips. Netflix, I was long. I don't know if I'm still long. I think I closed it on the pop. So the thought was it fell into support, so I sold the put spread and or bought a call. And the idea with a tight stop, if it goes below that, my video would say, don't be there below that. So because it's going lower, and I would try it again here. So now I will reset my effort here to look at Netflix when it goes down to here. And also, when it goes down to here, I would definitely get long Netflix. Most certainly long with an exclamation point. Oh, gosh. Okay, so Viacom C, you're talking about support. This is a stock that got a haircut out of nowhere. So if I'm long Viacom C, it's not the time to get out. Roku, last time I remember, it was in a support zone. So I said it better hold or else, but the or else scenario is unlikely. However, 360-ish is resistance. So they're going to find resistance here, guaranteed. So know that and expect it and manage your trade accordingly. I don't like the company. PayPal, I would be long. I'm long Square. Am I long PayPal too? I can't remember. But support zone, check it out. How many times has it fallen into support? So I said, I'm getting long, but if it loses it, look at that nasty double head and shoulder thing. It would go to here. So this would be the downside risk. I said, it's improbable. Therefore, the opposite, that's like the stock trading, you know, if you eliminate the improbability, then whatever is left, however unlikely, it's going to happen. Lemonade, I didn't like their last earnings report. I don't know much about the company. Double bottom, so if it loses that, get out. So yeah, you can be long, but I would get out below that. It's going to have resistance going into 110. But this is the insurance company, right? Yeah. So long term, it's a no-brainer. NVAX, I wouldn't touch it. I showed it a few times. I don't think the vaccine business is that good. That's all there is to it. I mean, Moderna is the most successful one, mRNA, and look at its P&L. And Novavax doesn't even have a vaccine yet. Did you know that Novavax has never had a vaccine and they have a vaccine in their name? AI, I'm long just because I'm betting on the management. Visa, I like it, but not right now. MasterCard is better right now. Nokia, I went long on the dip, but now it's just like a gambling chart. And it's a bet on 5G, so long-term hold, I guess. Docu keeps coming back up. Persistent little bugger, huh? So, but Docu is similar to whatever stock we were looking at earlier. It's banging on solid footing. Look how many times they proved it does. So the next dip into 191 is a buying opportunity with a tight stop. So credit put spread with a tight stop if you don't want to ride it down. But it's a good company, but it's definitely not cheap. So if this fails, so you're thinking it's not going to do it all by itself, but you don't know what the market is doing. So S-Bucks, I don't believe it's up here. This is the craziest short ever, in my opinion. So here's the, follow this logic, right? So the world is perfect pre-COVID. Perfect, no virus, everybody goes everywhere, pile on top of each other, French kiss in the stores, no problem. Now we can't even touch each other or get near each other for 6 feet, right? So we had a crash. Makes sense. This company works on people rubbing shoulders with other people. Crowd companies like Disney, right? And then we recover. Oh, great. Okay, good. So logic. And then we recover everything and we're still closed with a whole bunch of virus and the California shut down. I couldn't even go to a Starbucks. And now we're here and the stores are still not at full capacity. It just doesn't make sense. But I don't short it based on that. But it's not for me. I mean, the financials are in absolute ruins, I would imagine. So they're reinventing the profit margins. Look, they go from 18 to 3.95. The sales, it's amazing, holding up well. Look at debt. The debt to asset ratio. Debt is now, accelerating at a somewhat faster clip. Cash flow from operations, 12 billion in 2018. 5 billion in 2019, and there was no COVID there. That's weird. And now it's 2.9 billion. Nikola is a gamble. And statistics, it's 190 PE. I don't really care because of the situation. By the way, actually, I do care, and I'll tell you why in a second. Price to sales of 5. That's more expensive than Amazon. And Amazon doubled its net income in 1 year, 1.5 years. So here's my issue with this. Most restaurant operators that I know, they've never been more profitable because they run a skeleton crew because nobody needed for the front of the house. It's only the back of house that's working, and a couple of people up front handing deliveries, right? So they got collapsed, but they're making more money than they've ever made. And this company is more expensive than it's ever been by like 196 PE from 27. It's just ridiculous. Woo. AI, I'm long, but it's not looking good on the chart. CRM, I'm long, and I would book profits on the bounce and breakout, chase the breakout above. CRM is a great company. I can't believe they don't give him credit for buying a great company too. Maybe Microsoft buying the competition. What is it? Oh, shoot. I'm drawing a blank. The competition to Slack, Discord. Maybe they'll give legitimacy to their deal. SOS keeps popping up. What is SOS? Oh, I fell for it. It's at lows. I mean, if you're long, it's not time to panic unless they go below 4.4. I don't know what ZOM is. I need to write an article about it soon enough. So I guess what is ZOM? Can you tell me? Help me out, brother. So 1.4, 1.34, and 1.43. Whoa. Can they have done this any differently? 1.43, 1.4, and 1.34 are important levels. Lose that and you're going for a ride lower to 1. Animal health. Okay. Whew. GME? Can we not? Okay. I guess you're a fast trader, so we'll go shorter. Okay, so this is GME. What a lunatic stock. I can't believe the SEC is letting that happen. All right, so you want the tightest range, 184.2 versus a breakout from 197.3. And if you break out from 197.3, it's going to stall around 204. Said you can try to stop at 180, 181. Otherwise, this is the target, 175 minus. Do I have extra what hours? I don't. I just pushed it this way. Cannabis stocks, they're legit now. They have a decent P&L, so I wouldn't short them based on that. IWM, yeah, buddy. Wow, it's in a mini breakout. There's a gap to 225. Overnight, the rally was to 2306 and the RTY. So the IWM was up 2% on Friday morning, which they weren't open. So here, they were already here. Do not short it. Pfizer, where money goes to die. Did you know that Pfizer now is at level from the 80s? So why on earth? Why? So maybe 90s. Where is it now? Right here. 1998. Roblox, RBLX. Isn't it not doing well? Oh, you can tell I'm running on thin air here. So yeah, it's still too new of a chart. So you go on what you know about it. Higher lows is good, lower highs is not good, but they're coming into a point. So eventually, so the range goes, that's how it is with all stocks, by the way. This is probably not the IPO. So find out where the IPO is, the value they agreed upon. And now you have a battle of higher lows and lower highs. So the range is going from this wild action into a fish looking thing. And then they're going to have to break out or break down. The triggers are this and that, in my opinion. A break above here will find resistance immediately here. They'll come above it and then find it here and try to do that, repeat the process here, versus stall back down and try to hold that. If they go below that, get out. Whoa, what's that? This new mouse is weird. I didn't say anything about crowd. KHT, really? DAL. I was a fan of the airlines. I'm a fan of the airline logic. Look at that. So perfect world, no COVID, almost there, perfect sense. Starbucks, perfect, illogical sense. So they're still losing a crap ton of money. I would rather buy it closer to 40. get long it on a dip. So if the markets have a hiccup and it falls, I would sell a put spread. I have one here. See, put spread 1. I would sell another put spread here. So I would do an attempt up there and stop myself out according to my own specs. Credit put spread 2. God, why is this in the middle of everything? I don't know how to move it. If I touch it, I'm going to hang up or something. And this will be a breakout above here. So above 52.5, breakout, question mark. The question mark forces me to come back and look at it and not take it as a given. There's going to be resistance. Try to fill the gap. Okay, I can add more. Breakout to try fill gap into R. So there is resistance and there is a gap. So there's a carrot and sellers lurking. NFTs, you mean non-fungible tokens? Buy Bitcoin? I don't know. Thoughts on uranium? No, I don't know anything about uranium. QQQ, don't short it. Learn my technical skills. Eyeballs, Michelle, eyeballs. I'm an engineer, so I'm like technically, I lean technical. So this came natural to me. Plus, I have to give credit for 2 people that came into my life years ago, and they're hardcore Wall Streeters who trade no tickers. They just trade pure charts. They come in, they trade all day, they watch all day, they use the options. They opened my mind at how simple chart reading is and how to ignore all the noise. And that was the basis for me to twist completely my understanding of how things work on Wall Street. Where did I learn my trading? Hard Knocks, Igor. Okay, so I used to buy and sell stocks, try to eke out while I was working and running a couple of companies way back then. And then a friend of mine says, I'm going to the bank. You want to come with? I said, what do you need to go to the bank? Who goes to the bank? He goes, I have a margin call to cover 25 grand. I was like, what do you do? So he didn't know. He said, I did something with a call and now I have to come up with money to cover my position. And he didn't know what it was. So I dug into it. Yes, it was a margin call. So I was like, okay, what's a call? Maybe it was a put. I can't remember now. Either a put or a call. And I did my own homework. And one question led to another.
Hey, Nick.
Yeah.
Hey, so we're getting some questions about the subscription in here in Zoom chat. So I think we want to address that a little bit. So first off, I've been dropping the link in quite a bit, so you guys should have that. I'm going to drop it over on the other side as well, so you guys have that. Guys,
$5 a month. I mean, I'm what? Yeah. Okay. Never mind. Sorry.
Yeah. No, I mean, it is true. It's ridiculously cheap to get started with the Nick's trades, and it's the lessons that come along with that, the technical and fundamental analysis that he's providing, both in the company itself, as well as the environment that the company is being traded and doing business in. So definitely check it out. It is a tiered subscription. So you're going to get more and more trades the higher your subscription is, and you're going to get more and more access to content that way. So what I want to say is that it is a 14-day money-back guaranteed subscription. So if you don't like it, you can let us know. You get your money back, no questions asked. But to make sure that you're actually getting some trades in the meantime to really get an experience for the product, I can't recommend enough. I do this every single time we do this. I can't recommend enough. At least get the first and second levels. The discount.
Can I add something to that?
Well, really quick. I just want to answer a question. The discount code is pre-applied to the link that I'm sending you. So don't worry about a discount code. It's pre-applied. All right. So you don't need that. Just use the link. All right. Sorry, Nick. Go ahead.
No problem. So listen, you've read, you've probably participated in trade alert services. This is not it. This has trade alerts, trade setups that suit my style, and I go in details to express them in other styles. This is a way for you to develop your own trade alerts using good methodology repetitively. So the first level will get you exposure twice a month, right? Every couple of weeks, you're going to see full write-ups, full videos. You're going to learn a lot from it. And then it becomes once a week. which is a lot more. But eventually, if you get comfortable with a couple of levels and you want to commit to the highest tier, you'll then see 3 a week. So that's like a full class. And then more importantly, a weekend wrap up and prep for the next week. So I don't know if I showed this or not, but this is the homework I do for myself. And I draw these boxes a week ahead, and they usually hold up. This is all the indices, the major ones. And you can see only the NASDAQ popped above the last minute on Friday, it's Thursday. So it's like learning how to fish versus, hey, what fish am I buying today? Or it's the process of learning. The more often you see it, the better. That's why it's best to make it the goal to climb up the echelon that he's offering. And we've been doing this. We've been doing this since 2012. Not this particular format, but in one way or another, I've been working with Benzinga since 2012. I was offering credit spreads at the time; nobody was doing them, and by luck, I landed there. And thank God for that, because it's a great outfit. Nobody's going to offer you money back, no questions asked. And this is the opportunity that I love that they provide. This way, I'm in it with a clear conscience that somebody had all the time in the world to bail if they didn't see. And by the way, before you do bail, if you're missing something, tell them, because they come to me and say, hey, you think you can add this? And then maybe you get what you want.
Yeah. So what Nick's talking about is that Benzinga's support, Benzinga's product teams, everyone at Benzinga is very, very receptive to what subscribers are asking for. So it's not just a big, huge company that you're subscribing to and you're just going to get what you get. It's going to improve over time based on community feedback. So if you subscribe, I highly recommend that you really take a good look at the platform and be vocal about things that you would like to see, because that's what you're going to see in it the following week. We're very quick with this product and very receptive to feedback. So just dropping that link in there again one more time. Once again, it is a 2-week money back guarantee after you subscribe. And then just so you know, you're going to get more trades if you buy at least the first and second tier for the subscription.
It sounds so salesman. If you buy this, I will give you that. It's an opportunity.
So Nick, let me do the selling. You do the education. We're a business after all, and that's how it is. But this is the lowest price you're going to find.
This is a cheapest education. I can speak to that, Gary. I wish I had this opportunity. I learned it with tuition. Tuition meaning like hard losses. So you can learn it the hard way, or you can learn it from somebody else.
Yeah, absolutely. And we're getting questions. Yeah, this is an option service, but the all of the information that you're getting about technical analysis and fundamental analysis about these companies is going to give you an idea of the way that Nick thinks about these companies. That's valuable no matter how you trade the company. But Nick's focus is options. So on that first level, you're going to get simple calls, and then on the higher tiers, you're going to get more complex, but more risk down, or more. What's the best way to phrase this, Nick, in terms of how you're managing
okay,
risk?
So higher odds of success. Yes, selling put spreads is mathematically the higher odds of success. Some people view it as, hey, it's too much risk, but it's really isn't, because it's a give and take. There's no reward if there's no risk. And let's put it this way: I would rather risk a little bit more money and have a mathematical advantage to my opponent versus risking a lot less money and have no advantage and leave it up to chance for it to work out in my favor. And all this is, I cover it one way or another in the videos. So I'm so repetitive in the videos that I get sick of myself. But for somebody that hasn't seen it, they get it. It's like watching the lesson over and over, as opposed to being in the classroom and having the teacher teach you something. So I make mistakes, and often for my own trading, but the method is sound, and therefore the mistakes are not blowouts. It's okay for something to break my heart here and there, but it's not okay for me to take a risk that blows me out.
Very good. All right. So Nick, I don't want to take up any more of your time on this Sunday. You've been here for quite a long time. So I want to thank you very much for spending all this time and going through all of this information.
I want to thank everybody who took the time to come on a Sunday that's a holiday for a lot of people. So I find that mind-boggling, and I'm very blessed for that to happen.
Wonderful. All right, have a good one, Nick. I'm gonna stick around for a little bit.
Okay.
All right, guys. So my thing is that I'm gonna stick around and answer your questions about the subscription. We're gonna give Nick a break and let him enjoy some time with his family. So if you have questions about the subscription, drop them here. I'll stick around for about 5 minutes. Yeah, just I do want to just comment on GE. GE looks very good right now. So there's only an annual subscription. The replay of this video will be sent out via email to everyone that registered to watch the event. The best way to get a trade and all of the content that comes with that trade quickly is to get tier 1 and tier 2 when you sign up, because tier 1 is 2 a month, so there's a chance that you might not have enough time to really do anything with that within your 2-week money back guarantee period, the refund period. Thanks, Mike G. Thanks for coming. Have a good one. Does this work for Forex? He does not look at money markets. He's only looking at the stock market. Is the can I get a 1 in chat if the website is working for you guys, and can I get a 2 in chat if the website is not working? The price is $67.90, I believe, for a year, not a month. That's what you pay a year. So 1, the site is working. Thank you. That's for a year. So that's where we say that it's like just under $6 a month, but it's paid annually. That's cheaper than Netflix. In the subscription, Nick is not looking at weeklies. He's looking a little bit further out. A little bit. Nick is all about conserving capital. This is not YOLO risk. Let's just use options because we're gambling. Nick gambles, but he wants the odds. He wants the odds to be extremely in his favor. Nick is never putting on a trade where you know, he likes to have 80% odds of success as a minimum, and you are able to see that when you're doing option spreads, which is the trading strategy that you get on level 2 and level 3. I can use my own risk management ? On Nick's picks, he'll often give alternate versions of the trade that you can take based on your risk tolerance, and you're welcome to. I mean, you're here to learn. This is earn while you learn is the whole idea. So you're welcome to do your own iteration on the idea. It's up to you. To get the subscription for level 2, you must first buy the first one. I know I sound like the bad sales guy, but that's how it works. So you get 60 for $67.90. That's level 1, and then after that, you'll see another screen. So that you can also grab level 2, and that's what I recommend that you do is you click that button to grab level 2 as well. It's a 14-day. You can think of it like a 14-day trial, but if you don't like it, which is totally fine, you can but if you don't like it, you must cancel within 14 days after buying. It's 30% off everything for people that are watching this right now. So you're going to save about a third on every tier if you go through the whole checkout process. We'd like to keep the discount limited to just during the day of the webinar. Sometimes there are extensions, but I don't know how that's going to work. The enhanced can be up to $500. So the second tier can be up to $500. but today it's about 208, I think. So it's a very, very deep discount. So that's 30% off an already discounted product that we run like almost a constant discount on it. But it's an additional 30% off with webinar viewers right now. I'll drop the link again. Good question. Link coming in. I want to thank you. When are we going to get rich? Is a great question. What's one thing I want to say is we're not here to tell you that you're going to be able to buy a Lambo or anything like that. This is for educational purposes. Nick doesn't run around riding a giraffe wearing a top hat and telling you that his trade ideas are going to turn you into Elon Musk. That's dumb. And those are people that are being very dishonest with you, and they're all over the internet. This is about setting a solid foundation for understanding how to read charts, how to look at the fundamentals of a company, and how to make smart, high odds of success options trades. Do we get weekly sessions like this? You're going to get lots of video content, nonstop analysis of the markets and all his picks. Yeah, Jeff, you're the only rich one here. When you get in, you'll see all of Nick's past trades. They're all on the web membership website. You'll see all of his past videos. You can access everything. Where's the link for level 2? It's after level 1. Yeah, so the 67.97 is the starter package, yeah. How long is the promotion going for? I assume you're talking about this 30% off thing. Again, we like to do it just on the day of the webinar, but I don't handle that stuff. Sometimes there's extensions. I don't know how that's going to be structured, so I don't know. You can access all the videos. Are there beginner videos? Yeah, actually, when you sign up, there are videos that explain particular trades, technical analysis of those. But then there's a whole page of like introduction to like what is an option spread, what is a bull put spread, how does an option work, that sorts of things, So like foundations of how options work from Nick's style. All right, guys, I am going to spend some time with my family. I want to thank you guys all for taking some time on this fine Sunday. Again, grab that first and second tier so you can get everything. Wait, Eddie, what's your question? It says, why won't you answer my question? What is your question? It's hard to ask your question because there's a wall of messages. I'm trying to keep up with you guys, but I can only answer so many. What is your question, Eddie? The difference between level 2 and level 1 is more content. So the higher the level, the more trades you're going to get. So level 1 is 2 trades a month, and then level 2 is going to be a trade a week. So then once you get level 2, you're going to have a total of 6. So it's an additional 4 trades. And then once you go to the next tier, which is the third tier, which is the final and the highest one, you're going to get 3 more a week. So this is based on like, am I beginner, am I intermediate, and then am I advanced? We want you to grow as you go, kind of thing. We don't want to just send you a whole bunch of trades and inundate you with stuff, because you know what? We tried to do that and people complained so much we stopped. The recording of the webinar will be sent to you via email if you registered. Yeah, the FAQ is a good idea. We're building a new website that will answer a lot of commonly asked questions. But a lot of like the really fundamental questions about like how to set up your brokerage or whatever, so you can trade options and that kind of stuff, are covered within the membership site. Eddie, I'm sorry, I'm trying to keep up. Eddie, what does anyone know what Eddie's question is? And sorry, my computer is also like kind of freezing oddly. Like it's not even my computer; it's just the Zoom window. The purchase timed out. Do I still get the discount? Yeah. So when you purchase, if it acts funny, like it takes a minute to process. So let it do its thing. The button should turn red and say like, please wait, don't do anything, don't refresh. Third time I ask, no answer. Eddie, I got charged. Yes, you bought the product. Does level 1 cover technical analysis? Yes, it does. And then whoever keeps posting, sorry, Zoom is like going crazy for me. I'm like, it won't let me scroll up and down in the chat. But whoever is posting the prices, thank you for doing that. Yeah, Igor, I don't know, man. I'm trying. I want to I want to make everyone happy. So I feel bad when I can't answer the question. Azad, happy Easter to you too. Have a good one. All right, guys, I'm gonna take off. This has been about 2 hours. So yeah, I'm gonna send the recording out to people that registered. The discount lasts for that's Stack Crackle Pap. That's a good question. Is the discount for just the first year or all the years after that for as well? It's a forever discount. Special friends and family deal. Best friends forever. You get the discount for every year that you want to stay subscribed going forward. As always, we will send the recordings if to all everyone that's in Zoom is going to get the recording. Don't worry. BFFs. BFF discount. On the website, you should see the support, how to contact support. Igor, you better get the recording. Trust me, you're gonna get the recording. When we started this, I asked you guys, please, if you see someone asking about getting the recording, answer the question, because people will ask it over and over. It's insane. Eddie, you got charged 114.90. That's probably because you checked the box for the Stocks to Watch newsletter, which is a bonus, which normally you have to pay $47 a year for that. But you can get that as a one-time payment added to your subscription. You probably check the box that says literally, yes, I want the Stocks to Watch newsletter. If you don't want it, just contact support. What is Addy's? What is the question? Nobody is getting the recording. Y'all been conned. Shut up. We are sending the recording to everyone. This is a 14-day trial, right? Yeah, basically, but you have to put your credit card in and you're paying first. So it's not like some folks have been saying I call it a 14-day trial. I don't feel right doing that. I think it's a 14-day refund period, and you can cancel if you don't like it, and you will get all of your money back to the penny. Can you help me with a rain check? I only have rent right. JY, I have to be honest with you. If you're that tight, don't trade right now. If you're that tight on cash, I gotta be honest with you. I don't think it's time to trade. I think it's time to think about saving and setting up a solid foundation to build an investment account. Okay. Thank you. I'm going to leave now. The recording will be sent out to everyone that registered via email. 30% off lasts for today. I don't know how the extension is going to work. I don't know if it will last tomorrow or if there will be an extension. I have no idea, guys. I don't do that stuff at Benzinga. So thanks for tuning in. Have a great weekend. I hope you and your family all of the prosperity and health in the world. Seriously, I really mean that sincerely. Yeah, so take care, guys. I'll drop the link in one more time, because I would be remiss if I didn't. Let's find that link. Yada yada. Boom, dropped it in chat. Boom, drop it in chat. Rodrigo, thank you. For newsletter specific questions, email rodrigo@benzinga.com or call directly. He's got his number there. Rodrigo is your friend at Benzinga. That's your man on the inside for these subscriptions. We call them newsletters, but you also get text notifications, guys. Also text notifications if you opt in to get text alerts on these.